Is the Delray Beach real estate market at a standoff? Hi, it's John Whelan. Welcome back to my How's the Delray Beach real estate market update for February 2023. Today we're going to be talking about a few things. First, median sales price and price drops. Of course, the days on market again. We're going to be talking about active listings and sold listings. And I want to show you a couple of graphs on the 10-year Treasury yield, as well as what is going on with all these cash buyers. Let's get to it. Let's start with the median sales price. As you can see, February of this year was $360,000 for all of Delray Beach compared to $302,000 last year. That's a 19% increase in just 1 year. But over the months, we're going to start to see these large double-digit numbers start to soften because we're comparing against what happened in 2022, which was when the market was peaking. So every month we go forward, that number started to lower, and this year we're going to see those numbers on a percentage basis drop as well. And one reason why is there's no report for it, but every day I am seeing between 20 and 25 price drops coming through the MLS on a daily basis. So as the months go on in the year 2023, we're going to see the year-over-year comparison drop, and things will not look as drastic as they have been. Let's talk about the days on market for the 7th month in a row. That's right, since July of last year, it's gone up every single month. And last month in my report, you can take a look at that there, I said that we might see it drop or ease off because of high demand and high season. Boy, was I wrong. In this chart, it went from 49 to 54.9 days, a 10% jump in 1 month. That clearly says that there's a standoff between sellers and buyers, and one of the reasons last month was because of the surprise in mortgage rates. Where it went up, we still have high prices, mortgage rates going up, and days on market continues to rise. We're just going to have to keep watching that over the months to come. In addition to my monthly market update, I also write a weekly e-letter to my database. A lot of people enjoy it. I talk about all things Delray Beach, whether it's development, lifestyle, what's happening, restaurants, and of course real estate. It's free, no obligation. The information is down below. If you want to be a part of that, just click on that and you'll get it right away. Sometimes we get information and you just kind of wonder and scratch your head going, how did this happen? Take a look at the sold inventory versus active listings from last year to this year. So sold listings last year was 379 units, but last month was 237 for a drop of 37%. Now take a look at the active listings. Last year there were 540 units available, and last month there was 1,146 units for an increase of 112%. So how could we be selling less inventory when there's double the inventory for sale? That's part of this struggle between buyers and sellers in today's market. It's a part of the affordability index, and I'm going to take a much deeper look at that next month. Now I want to slide in this chart. This is about the 10-year Treasury bond yield. You can take a look at this. It peaked in 1980 at over 15%. But since then, for the last 40 years, the yield has gone straight downhill to around 2015 when it went below 3%. And for the last 8 years, it's been lower than 3%. We know that the bond yield is correlated to the 30-year fixed mortgage rate. So take a look at that. We've had low rate scenario for the last 8 years. Last year in gold, it spiked higher and it went across and above the 3% line. What happened? Mortgage rates went up by 100% to over 7%. So if we look at this 40-year trend where rates went down and prices of real estate went up, now we might be finding the first stages of a shift in the real estate market where interest rates are going to go up and maybe housing prices might soften or go down. Now for the final chart, let's take a look at the overall market and how it relates to cash. Take a look at this. In the month of January, 56% of all buyers were cash buyers. That says one thing. People are leaving the cold months from Northeast. They're coming to Florida to our high season, and they're coming here to buy real estate. They're bringing their wallets and they're dumping cash into real estate. Why is that? Because when inflation remains high, smart, astute investors buy one thing: real estate. So to put a ribbon on this month's report, you can clearly see that the market is having a standoff. Buyers are buying, but less. You can see it in the sold information. Sellers are selling, but take a look at the inventory. You can take a look at the price drops. You can take a look at the interest rates and cash buyers. There's just a lot of data points that are not aligning in one direction. Why is that? Because inflation is high, because the Fed is still raising rates, and we don't know where this economy is going to go. So that's making this a confused real estate market. What's going to happen next? I don't know. Come back next month for more.